I'm doing a series of videos on location, and it's basically defining or identifying the proximity group location patterns, because those are by far the most important for us to find. I mean, it's easy to find the identical indicators, and it's easy to find the trend chart down touches or up touches. But the proximity group patterns have location patterns and shape patterns, and they're in a variety of areas or have differences to them. And so when you have the identical indicators and you have the touches in the trend chart, then all we need is one of the locations, and of course the shapes that go along with it. You got to have the shapes, but you got to have the locations. It's easier to find the locations first, and then verify that it has the patterns after you've identified the location, because there's only 10 or so locations, different types of locations in each of the gap up and gap down patterns. And you might not say there's even that many, depending on how you look at it, but they do have different indicator lines that identify what the pattern itself, what the location pattern itself is doing. In this example here, I'm in AKAB, and this example on the vertical green line day is April 25th, 2017. And I'm going to start right here at the trend chart. This is one of the most important gap up situations that we see, and it's also almost every other situation I can think of has a down touch to it in the trend chart. Like trend red will down touch one of the blue, pink, or yellow lines, or the zero line, or down touch under the zero, or green will do the same, or gray will do the same. And as a result, it physically down touches something. When the sensitive indicators pick up a really strong movement, but it's totally unidentifiable in the candles, like it is here today. You got a whole bunch of, if you look back here, we got 10 or 20 days, maybe, I don't know how many days it is, where relatively speaking, the candles themselves are very short, and there's not much to them. When you have that situation, and keep in mind, if I expand them, they'll get better, but still the difference is quite minimal, relatively speaking. We do have a 2-day start of an uptrend here, meaning today with the vertical green line and yesterday. Otherwise, it was been pretty much the same of what's going on. But the trend red and trend green are in a down up up pattern, which is basically a BOC 2-day pattern, and the same is occurring in the power chart down here, where we have the yellow, pink, blue, and white. All four of them are in a BOC 2-day up pattern, down, up, up. And the power Zion is divergent with the power 4, and it is down, and it's almost like it's down touching zero or down touching the green line. And of course, you have heard me tell you, hopefully in other videos that you've seen, that when you have a divergent condition between Zion and the power 4, it's usually an excellent opportunity for a gap up. And provided you have the identical indicators and the down touch situation, then you have a gap next day. In the trend red, we call this a sky touch, and it's one of the few. There's a few other things that are we rarely see, but this one here we actually see a lot, and it has no physical down touch. And so we refer to it as the sky touch because the sensitive indicators are already picking up a really strong movement in the right direction. And if we left these candles like in a normal position and we moved to these candles up here, we would see that they're monsters compared to what was happening before. And so, again, if we shrink everything back down to what we might call normal, we can see that for the last 10, 15 days, maybe more, looks like 40 or 50 or 60 or 100 days. Wow. Before this, we made absolutely no movement in the stock. So that's the basic essence of what we have here in identifying in the power location pattern category. We're basically looking at the power 3, 4, 5, and of course the power 6 is red. And in this case here, as I've mentioned before, when we have the power 5, that's the Zion, the blue, pink, white, and yellow, above the power orange line, we also have the power red above there. So we say the power 5 is all above the orange, but most of the time what happens, red, which is then the power 6, is also all above power orange. So that's the essence of what we have in the power chart. There's other key factors that I want you to be aware of when you have gaps. One of them, for example, is over here in the price chart. Price green is at 136, and price red is at 130. We often see those, when we have a nice gap up, we'll often see 120 in one or both of those or more. It'll still work at 110. It'll still work at 100. I've seen it really low when you have a real low down cycle push. I mean, you can have those at 50 and 60 then. The power green, or the price green and the price red, excuse me. But normally what happens is you're in a low angle up. For example, the vertical green line down here in the swing chart. That line is our swing Zion right now is in a low angle up on a peak. And it's great when swing Zion is highest, and when it's in a low angle up, that's actually a opposite movement condition, and there are a few others that I'll point out to you here before we get done. But swing pink is another one. It looks like it's down touching swing green or yellow or whatever. Or not, excuse me, that's not it. It's going the right, it was actually telling us that it's going up. But the condition of the swing Zion being in a low angle up is a condition that we see a lot. We see power red highest, but oftentimes we just discount the power red and we think of what else is there. So in this condition right here with the power chart, we're actually seeing power pink as the highest, which would be a deep cycle movement on a high cycle, they call it, with power pink as the leading indicator or the highest indicator when we exclude power red. So other Zip Zion has been up for 3 days. and zip green is at 100. When zip green is at 100, we can see gaps real nicely as well. Sometimes they'll be on the first day, not necessarily several days after. And then trend gray is divergent, trend gray is a down touch to the trend blue line, and trend gray is also divergent with trend red. And then of course trend red and green. Trend red is at 22 and trend green is at 13, and that's a huge diff spread, D-I-F-F. That's a huge diff spread between the two. It's a trend red sky touch, we call it, and it's very effective. We see it a lot. This gap was actually about $2.50 from previous close to the open. So that's the pattern that we see. And we see it a lot. It's a BOC 2-day up for the power 4, and Zion is down. Another good way to see this is with Zion underneath orange, and if it's underneath and down, then it's a double divergent pattern. It has a directional divergent pattern with Zion down and the power 4 up. If it was below the orange, then it would be divergent between the power 4 would be divergent with power Zion, one being up and one being under the power orange lines. So lot of information there that just depicts what's happening in the way of a gap. We ended up also, before I forget, we ended up with 11 patterns in a 2-day BOC and 7 patterns in a right leg W pattern. So there were a total of 18 indicator lines in 2 patterns, and so again it was fairly significant in its ability to capture what we identify as a gap up. The other thing, before I forget as well, green is at power green is at 0. Let's see, power green is at 0.03, minus 0.03, and power orange is at minus 0.08. So one other one I want to show you before we go. It's almost identical. It's just up here a few days. This is actually on May 15th, 2017. Again, it has the low angle up. Power green and orange are real high. Price green and orange are real high at 120. Red's actually at 124. Here's where the green crosses over the red the next day. That's the gap day, and that's oftentimes what we see as the peak, which in this case it is. It crosses over red, green crosses over red in the price lines and becomes the peak and then goes back down. On the vertical line day, which is the day before the gap, zip green is at 100. Pink is coming up and your red gray is going down. Your blue and yellow are divergent at this point. We also have as supporting evidence the zip Zion is lowest and going up. So that means that the next day it's going to go up, and that's actually a pattern recognition indicator. It's one thing to have a line recognition indicator, but here we have an entire pattern, and that's zip Zion lowest, telling us that next day it's going to go up. Also, swing Zion is in that low angle up peak that I talked about, and swing Zion is highest. Remember, swing Zion is your what? It's your price barometer. When it tells you that it's highest, it sounds stupid, but it's telling you that the price is the highest it's been for a while, at least in the last several days. And it's a momentum. It's telling you about momentum. It's telling you that, hey, watch out, this thing is going to continue to go up. Because remember, the basic principle in a trend is stick with the trend until you get a signal that tells you differently. And of course, many of the indicators are depicting one movement one way or the other. Excuse me, I said that wrong. When you have a group of identical indicators, they'll tell you that the price is moving in a particular direction, and then you'll get some opposing indicators that'll say, oh, well, wait a minute, I don't know if that thing is going to go up or if it's actually going to come down. When you have, 12, 15 indicators saying it's going to go up, and you have 2 or 3 saying that it might go down, the obvious overwhelming amount of supporting evidence tells you that you're going to have a gap up. And so the evidence is what we look at. The evidence verifies what we're doing. In the trend chart here, we have the same thing as we had in the last one. This is a sky touch. Trend red is actually, if we look right back here, trend red is climbing at this point here. So trend red is in a 3-day up pattern, whereas trend green is in a 2-day BOC up pattern, down, up, up. And so that's a little bit mixed, and that's fine. It works just great, but it identifies with what what the gap is. In this case here, on the vertical green line day, the closing was 12.90, and the opening the following day was at 14.86. So it gapped up just about $2 instantly the following morning. And what it had was, I identify it with 2 primary signals, and or patterns, if you will. And that's in the sky touch in the trend red, where trend red and green are going up either in a 2 or 3-day up pattern. And we have the group pattern location in the power chart. Now we actually have 2 different patterns here, and by that I mean yellow. Power yellow is above power orange, and the other 3 patterns, the other 3 indicator lines, the power 3 is under power orange. So that's one pattern location group that we see that is there when we see gaps up or gaps down. And in this case here, when yellow is above, it's typically a gap up. The other pattern situation that we see is power Zion is down and power 3 is up. And so by that, even though we have them all under orange, that pattern is prevalent. We see that a fair amount of time. The oddball, of course, is power yellow, because it is in what we refer to as a TOC pattern, and it's a TOC higher pattern, meaning that it didn't come back down, didn't form what might look like a right leg W. But when we pretty much identify things in a TOC format in the power location discussions. So those 2 location patterns are there and dictate the likelihood of, if you spotted either one of those, it would be a good indication that you have the supporting evidence within the proximity group to justify a gap. Then you would verify the trend chart. The trend chart has the sky touch, so you know it's there. And then the other category that you're going to be looking at is your identical indicators. And as you can, or maybe not, you can't see, but in many of the cases, we have BOC 2-day up patterns or TOC higher pattern. Like, for example, in your zip red and gray and blue, you have a TOC higher pattern. So there's 3. Zion and power Zion is 4. Power yellow is 5. So there's several of those patterns here as well. You also have in your swing Zion and your swing pink divergence that's taking place. You have that also in the swing, in the zip yellow and zip blue, one going up, one going down. When you get divergence in stuff, it causes a reaction, because these are very sensitive indicators, but one is telling you that the market pressures are moving up, and the other one is telling you that the market pressures are moving down. And when you have something that's pulling one way and another one that's pulling the other way, it's going to snap. And as long as you can read the indicators and see which way it's going to snap, it's to your advantage. And it's real easy to see what we have here with all the patterns defined and classified either in gaps up or gaps down. But it's exciting. I kid you not. We stand amazed at what this system will show you. We identify gaps before the gap occurs, and it's very, very powerful stuff. Most will tell you it cannot occur. You can't see things like that, and they're either ignorant or they have their own system, whatever it is, and they don't want you to know about it. And they're not going to disclose that, yes, you can see these indicators establishing direction before the direction even takes place, before the price movement even takes place. So you got the sensitive indicators are the heart of the system. The formula power that I've talked about on other videos is those patterns, conditions, and signals. But it's a 3-step process of identifying the pattern, verifying the conditions, and waiting for the signal to get in or out of the trade. It's just amazing.